Hello and welcome to Fireside with VC. My name is Andrew Romans, and I'm delighted to have my old friend and colleague Claus Skaaning on the podcast. Claus is the CEO of DigiShares, which is a company that digitizes real estate assets, but through white label and also a direct exchange, which I think we can talk about now. The reality is they can digitize anything from funds to any asset class. So it's funds, entrepreneurs, large shareholders, but we'll get into all that. Real estate has been the core area where these guys are having, I think, the most traction, where they kind of dominate. I've actually known Claus for something like 15, 18 years. Back in ancient times when I was running the Founders Club, the equity exchange fund, venture capital equity exchange fund, Claus had a company called DigiShares, which was doing pretty great. And so we became a shareholder that way. So I've got a lot of respect for Claus. I've actually been lucky enough to be advising the company since inception, and they started to really get commercial traction. And so, being the wimps that we are, we're lucky enough to invest now that it's really sailing through the choppy waters and out of the woods there. But Claus, why don't we start with this? Explain, and also I'd like to say this too, that I always like the name DigiShares. It's like digital shares. It's as opposed to tokenizing your shares or blockchain or Web3 shares. And it kind of to me says, like, forget the fad of blockchain or Web3. This is an inevitable path of humanity to digitize human workflows and kind of smart contract into data. And when it comes to real estate and back office and everything, it's just the right way to do it. There's some return to the workforce woman whose title is head of digital transformation at every Fortune 500. It's not like the world is not digitizing. So anyway, I say kudos for the name. But Claus, great to see you again. Why don't you explain? Obviously, I know what the company does, but for our listeners or viewers, what does DigiShares do?
Yeah, and thanks for inviting me here. It's a great pleasure, and looking forward to a good discussion. So DigiShares, and the name was actually chosen for exactly that reason, right? We see tokenization as right now it's a hyped new technology, right? But eventually it's going to fade out and just become a background technology that we all use, hopefully. And that hence the name DigiShares. So basically, we as a company, we digitize and tokenize shares in companies to basically make the tokenized shares more liquid, and to get sort of the same transaction efficiency, transparency, security, cost reduction, removal of intermediaries, and so on that you see in the rest of the blockchain ecosystem. So tokenization is really just about getting shares, stocks, any type of security into token form, so we can transact with them on the internet and achieve the same benefits that you have with Bitcoin and cryptocurrencies and various types of utility tokens and so on. Of course, tokenization is more difficult, I would say, because we are working with securities, so we are within securities regulation, and we have to, of course, follow that in each country where we operate. But in a way, it's also easier because we already know the regulation that we have to follow. It doesn't change all the time as it does for the crypto space, the unregulated space. Right now it's unregulated, but it will be regulated too. So yeah, that's a short summary.
Yeah. I mean, in my experience, I wrote a book, Masters of Blockchain, and I think you're in that book. But I've met everybody in the crypto world, and there's a lot of very colorful personalities. And I think you're a breath of fresh air of someone who understands regulation and brings like an old school, raise venture capital funding, slowly build a business, and not try to list it on Kraken before you find out if this Bunsen burner science experiment works or not. But so in a way, it's a bit like Carta. In fact, I don't know why Carta dropped the name eShares. I remember Carta was eShares for many years, and then they changed the name to Carta. But it sounds a bit like the real path that DigiShares is on is Carta with an efficient, functioning, legally compliant secondary market on it, where you get your digital shares, your e-shares in the startup that you invested in, which is the way it works in the United States and Europe and around the world. But then you should be able to say, hey, I like the fact that I invested at 8 million. Superhuman's worth 2.5 billion. Maybe I should sell a little bit for my fund and return some money to my LPs. So that's part of the play.
Yeah, you could definitely say that we are comparable to Carta and Juniper Square and other similar systems in that we have also share management or share cap table management functionality, investor management functionality, and so on. But of course, we add the tokenization dimension, right? So we also facilitate a lot more transactions within our system, such as a fully automated digitized purchase or investment transaction workflow, a distribution or dividends workflow that's fully sort of digital and automated, where we can pay out USDC, for instance, to a large number of investors just with a push of a button. But then, of course, we also facilitate peer-to-peer trading, which is something that you cannot do without blockchain technology. So we add quite a lot of value compared to Carta and Juniper Square and similar companies, but of course they are stronger, I would say, on the investor management side and so forth. But we can add that, I guess, longer term.
Okay. And so what's a concrete example of a customer that actually came to you, or you got in touch with, and you you got them on the onboarding system, and now they're operational? Like, what's a profile?
Yeah.
Maybe give a couple different profiles.
One good example is a company called Market Space Capital. It's a Dallas-based real estate developer, I think, with a few hundred million assets under management. They came to us a couple of years ago, wanted to tokenize one multifamily property called the Spot at Myra Park. It has a value, I think, a total value of around 20 million, but they wanted to tokenize around 6.5 million, I think, and actually listed on exchange. So first it was tokenized on using our system, and then we sort of facilitate the listing of those tokens on T0, which is an exchange in the security token space. It's been listed now for a little more than a year, and the value, I just made the calculation today, fortunately, so the value has increased 23% for this asset just by making it liquid and tradable, right? So
Which makes sense, right? Because there's a supply and demand curve.
Yeah.
If you have a finite supply and you increase the demand for it, the strike price should go up. In my book, which is now ancient and obsolete, we profiled Elevate Partners, where there was a Thai family from Bangkok that acquired, I think, the St. Regis Hotel in Aspen, Colorado. And they spent, like, I don't know, 90 million to buy it, another 50 million to refurbish it. So it's like $1,500 a night for a tiny room in there. And they only decided to list like 8 or 10% of the property in one of the first real security token offerings in real estate. And when I was thinking about it back then, I was thinking, like, if you and I were younger, you have your first daughter, son, instead of giving them like $100 and say, hey, when you turn 18, you can have this $100. And with the way they're managing the US government, that $100 will have the purchasing power of like $20 by the time your daughter turns 18. Whereas if you bought her $100 worth of the Empire State Building and say it's like a trophy asset, and say, hey, it's your Uncle Andy from New York, here's $100 of the Empire State Building. Commercial real estate's having its pleasures, but if they turn that into residential, it might be worth more. Normally real estate's an accreting asset as opposed to a depreciating currency. So that is interesting. So maybe talk about some of the other functionality. Like, sometimes I think large companies or even small entrepreneurs, new entrants, benefit from technological change. And a big, huge company can also benefit, but they can also suffer, like Kmart getting destroyed by Walmart, that it looked like Kmart was the better bet. And then in the end, the Walton family is the richest in the world. So what is the risk of being too slow to adopt? I mean, there's or even talk about, like, what are the back office benefits of digitizing your business?
Yeah, I want to comment first on the first point you mentioned, right, with giving your child real estate backed tokens, right? It's actually many of our clients come to us with an idea sort of like that, but basically focused on helping young people get onto the property ladder earlier, right? Because in many countries, it's impossible for young people to buy their first home. If you can allow them sort of to buy fractions of real estate property, right, they can get onto the property ladder much earlier and sort of enable them to buy their first home much earlier than they would otherwise have been able to, right? So I think that's a great use case for large companies, institutionals adopting the technology, and we speak actually to quite a lot of them. It's actually a slightly similar picture, I would say. They are also interested in fractionalization and democratization. They are interested in sort of reaching retail. Also, I would say retail. We look at industry reports quite a lot, and around 40% of the global wealth is in the hands of retail, and retail is not allocated into private equity or real estate at all, right? So there is a huge opportunity if you could sort of fractionalize down to the point where you could access or get retail investors invested into real estate and private equity. So that's actually a huge motivation, I would say for them, just to gain access to that type of investors. But also, of course, they're interested in sort of internal efficiency improvements, cost reductions, and so on, and the ability sort of to digitize and automate more processes and just make it less error prone and human driven, I would say, generally.
Yeah, I mean, I haven't looked at it in ages, but like the price per share of like Warren Buffett's Berkshire Hathaway has always been some like obscene number of like 30,000 or 400,000 a share or something like that. And so to fractionalize that and offer it to teenagers in Medellin, Colombia, you know, to be able to buy it on their phone. And if they're interested in Warren Buffett, you know, they can token, you know, fractionalize and with efficiency do it in a way that's compliant, works. That makes sense. So there's kind of the democratization side of this, and then there's the simply how can we increase demand for assets that we own, and get efficiently include more democratization of it, but also out of capitalist greed. If I can increase the unit ownership price. What about actual fund formation, capital formation, fundraising? You know, like it seemed like we had crowdfunding 1.0 in the Rose Garden and a horrific execution from the SEC that basically failed the country. And then years later, when they came out with the regulation, most of those startups, it was the biggest graveyard I've ever seen of dead startups. But what's the what are you seeing on a real estate developer saying, hey, I'm in Miami, I have a project, it's gonna cost $20 million. I got 99 problems, but my big problem is I don't have $20 million. So are people raising capital by using this kind of solution from DigiShares?
They are trying to, at least, I would say. We have many clients coming to us looking to use tokenization as a way to fundraise, as a new type of ICO or STO. And I think there's a small graveyard forming also in that, under that use case, unfortunately. We try to speak to our clients and tell them that tokenization in itself doesn't necessarily make it easier for them to fundraise, unless there's some specific aspect of their business that makes it natural for them to seek funding from crypto investors, for instance, then it might make sense. But otherwise, not really, right? So tokenization makes their asset, it makes it possible for them to fractionalize to a greater degree, or to smaller fractions, right, and reach retail investors a little bit more or better or easier. But they still have to market it, and they have to sort of teach and educate the retail investors to sort of be aware and be interested and incentivized to invest into this new type of asset, which is not easy. And then, of course, it also becomes liquid, right? So as you could say, if you have two different real estate projects to invest into that are otherwise similar, one is liquid, the other one is not, it should be quite a big advantage, I would say. But if you have to force the investors to convert into USDC and install a wallet and so forth, then it's not always a benefit, right? So that's also why we have on-ramp interfaces to our system, so it's possible for issuers, asset owners to not force investors to use crypto, right? But to allow investment in normal fiat. And that's, I think, that's just the place where the market is right now. So we are sort of in a transition period, I would say, over to a much more digitized economy, right? Where we will have CBDC, so digital US dollar and euro and so on, and then tokenization will be extremely easy for everyone to use. But right now, it's not there yet, I would say.
But that's one of the advantages you guys have, is that you can deal with old school people that say, here's my Swift, ACH, regular wire transfer. I want dollars in, dollars out. Keep me away from these wallets that I can lose, on there.
Yeah.
So speaking of, a lot of people try to predict what will the price of Bitcoin be on June 30th or whatever. I cannot predict that, but I can say with total high conviction, with my children's life on it, that it'll go up and it'll go down, right?
Yeah.
So it's volatile. So it's pretty volatile. Like, it's like Argentine peso. It's up and down, up and down, up and down. But that probably seems to impact the ability for startups. Even though you don't need to have the word blockchain anywhere on your website for the way you guys operate, but it impacts founders. Like I've seen founders that had all the investors to the table, were ready to sign documents and everybody wire. And all these guys that were so rich on paper speculators of Bitcoin and shit coins, all of a sudden see a crash in the crypto market, don't feel so rich. And the funding collapses and the startup suffers, if not fails. You've been around now for a while. How have you been impacted by 1 minute it's hot, 1 minute it's cancer?
We are definitely impacted by it, I would say, both in negative and positive ways. So last year when FTX crashed, Celsius crashed, and so on, it was definitely a negative blow to the overall industry, and it also impacted negatively on us, I would say. For a few months afterwards, we definitely saw a decline in leads and new signups. But I think a lot of people also realized, which I hope they generally do, that we are not really a crypto company, right? We are more like a blockchain infrastructure company. None of our clients use Bitcoin or Ethereum or anything like that as payment options. They always use USDC or USDT, so highly regulated, trusted stable coins. And we can also use fiat payment options, right? So, and of course, we work with securities regulation, so we shouldn't really be affected by it. But of course, we are, as anyone else within the blockchain industry.
I mean, for listeners, wouldn't know this. Like every month, DigiShares receives inbound interest of people that want to tokenize something, even like art and other things, and then they go through that sales funnel, and then some of them spend money on getting onboarded, and that's real revenue for a real business. And then there's this ongoing fees for being on the system. So you guys are a real business, but I can imagine, every now and then I forward you the email where someone says, hey, 7BC, why don't you fund our company? We're digitizing real estate, or we're tokenizing real estate. And my first thought is, I have a conflict. I cannot invest in your company because I've already backed in Claus, who, by the way, I've known for 18 years. And then I look a little deeper and I think, wait a minute. And I email them saying, hey, I should introduce you to the CEO of DigiShares. And they go, no, that's what we're using. We're going to use DigiShares. And I said, did you get onboarded yet? And then they say, no, we're still raising money. So I know at least once a week, I get somebody emailing me, and they seem like they're all planning on using you once they get funded. So your team must be kissing a lot of frogs, waiting for one to get funding.
We are.
And turn into a prince. But what's the range of different types? So you have a Dallas real estate development company with a couple $100 million of AUM, having a good experience with tokenizing a small multi-family unit development, which, if it's in Texas, it's probably doubling in value since COVID. I mean, that's certainly what seems to be happening in Austin. There's markets like Nashville, Austin, Florida, everything, doubled. So it's like your payment is 4 or 5x bigger with interest rates and the doubling. But what are some of the other types of customers that are actually on board and paying?
Yeah. So we have a great variety of different types of clients. We have a fair share of real estate crowdfunding investment type platforms, right, that are startups and need to raise their own funding to pay our fees. So not the best, not the ideal client, I would say, but in some cases they do quite well, right, and they have a good business. And then of course we have also, I would say, pure real estate developers that have their own assets that they want to tokenize, and they have some idea for how to digitize and automate and modernize their business. That's I would say an ideal type of client. We have small clients like that, but we also have really large clients like that. We have one of the biggest real estate developers in Dubai using our system actually to sort of to make it like a retail push for their to expand sort of their market into retail, and sort of to take select properties and tokenize and fractionalize and make them available for retail investors, and sort of develop a new brand, new business in that space. So yeah, so that's an example.
And is it making sense to disclose your plans with your own exchange, or is that
Yeah.
maybe explain what I don't
Yeah.
know, would this be product roadmap or it's happening?
Yeah.
So
So we actually we used to be a pure tech provider providing a white label platform for tokenization, and we sort of didn't really go direct to to the market, but we've been waiting for a couple of years to an exchange to appear for our clients to trade their assets, and it didn't really happen. So we decided to create our own exchange as a separate sort of project within the DigiShares family of companies, right? So a separate brand available for our clients to list their assets on, but also for our competitors' clients to list their assets. It's going to be called Real Estate.Exchange. It'll be licensed both in Europe and in the US. We actually have licensing frameworks almost in place in both regions. And the goal is to allow retail investors to trade real estate assets in a sort of a crypto native way, right? So they, in this case, we will support wallets, and we will support sort of peer-to-peer atomic swaps with no counterparty risk to make it really easy, I would say, for us to launch the system. And then the idea
so
is basically to, yeah,
somebody could be in like we're investors in Nada, where they have these city funds.
yeah,
So they've got like their city fund for Dallas, Austin, Nashville, Miami, even Orlando and Tampa, I think. Somebody could do an atomic swap, meaning they
yeah,
could exchange, like if they're at $1.50 a share of their Dallas, they could swap to an atomic swap into Nashville. Is that right? So you could exchange one real estate tokenized
yeah,
token representing ownership in that for a different one. Is that correct?
yes. And not directly, right? So you'd exchange a number of USDC stablecoins with some real estate tokens, basically. You'd get them into your wallet. And your wallet would need to be whitelisted beforehand so that we can make sure that the share cap table and so on is updated correctly and everything is compliant.
Okay. Okay. So it's fully digitized, which sounds a lot.
Yep.
I think there's a huge cost reduction side to what you're doing. What about what are you seeing on commercial real estate or any like I spoke to some guy who was asking me if he could tokenize his horses. There's a guy from Hong Kong
Yeah.
asked if he could. He's big on Happy Farm and all those horses over there, and he was asking about tokenizing these horses, which are so valuable. Are you
Yeah.
seeing some other exotic use cases? I mean, the art world with Art Basel just turned into a big crypto fest
Yeah.
in Miami.
Yeah.
What are you seeing for other asset classes that make sense to tokenize? Even venture capital. I get
Yeah.
pitched all the time I should digitize my funds.
Yeah. Yeah. We see many use cases actually. Real estate is 90% of what we see, as I think still. So it's the majority. We see private equity a lot right now. We speak to some of the big firms. Horses we've heard about also, but we don't have a client doing it currently. We have a whiskey distillery that successfully sort of tokenized their their company, and I think they are planning to tokenize whiskey barrels also as an investment object. Then we see quite a lot of energy, sort of renewables, solar, wind type projects. We see mining quite a lot, especially coming from Africa, but also Bitcoin mining as an asset class. Yeah, collectibles we see a little bit, I would say, and art a little bit as well, but not we don't have any clients doing it, so it's not significant, I would say. I think that's a fair sample
That's
of
interesting. After so much hot air of so many people trying to digitize, or it just felt like attracting a lot of grifters that you'd see at these events, talking about that. So where would you say the overall industry is? Because I think every time there's a crash, it's a bit of a torpedo to the industry, and then there's a boom again. What do you see, not just for yourselves, but for other players in the space have traction in the overall industry?
Yeah, I think right now we are suffering a bit from the overall economic crisis, and also still a little bit from the crypto downturn last year. But actually, we are starting to see things change and improve, I would say, over the last few weeks, actually. So it looks like things are slowly starting to recover. But then I would also say for the tokenization space in general, it has been very overhyped the last few years. And I think that right now the hype has dropped to lower levels. And I think we are starting to cross the chasm, actually. So we've been working a lot with sort of early adopters and technology pioneers and startups right in the space. But I think we are starting now to get to the point where we need to cross the chasm and start sort of working with real use cases and demonstrate value, and actually sort of getting the pieces of the ecosystem together so we can really provide an end-to-end solution that creates a lot of value for the clients. I think that's sort of where we're getting to right now.
Well, I mean, I've spoken to so many companies over many, many years in the kind of Web3 blockchain, smart contract, whole crypto world, and very few of them have what you have, which is a sales pipeline that converts a certain number, they pay, this is revenue, and then the overall revenue of the business grows. So, I think that's great. Now, normally, most of the companies in our world are just doing private placements with VCs, and eventually maybe they file an S1 and they can publicly talk about your financing. But your latest funding round is rather innovative. What's the legal structure of your fundraise? And you can openly talk about it in a forum like this.
Yeah, definitely. So we are raising 5 million right now as a Reg D and a Reg S in the US. So these are exemptions to the normal sort of prospectus regulation and capital raise regulation in the US. Reg D means that we can sort of target accredited investors in the US for the raise, and Reg S means that we can target any kind of investor outside the US for the raise. So it's fully regulated. There's a PPM, a private placement memorandum. We can speak about the raise openly, and we can sort of even advertise it. We just have to be careful that we don't mix US and non-US investors.
Okay, so there's no ban on general solicitation for you, but you can only accept investment from someone that is an accredited investor. And do you have more strict, like 506C type? They need a letter from their accountant to say that they're accredited, as opposed to self-attestation.
Yes, self-attestation is not sufficient, right? So they have to be
right
verified by someone like Verify Investor or Accredit, so companies that specialize in making these checks.
Right, and that's all digitized. Well, great. Well, how do you think the world is going to be different as a result of digitizing large asset classes? Like, what does it mean? So 5 years, 10 years, 20 years from now, the world will be a different place, and hopefully we won't be dead from AI. But what does it mean? Like, assuming this becomes largely adopted, how is the world better or worse off?
Well, I think it will just become the background infrastructure that we use to transact with securities, and it's not just me, right? So recently, tokenization has been predicted to be the next killer use case of blockchain, right, by JP Morgan, Citibank, State Street, BlackRock, and so on, growing with a factor 80 over the next 6-7 years, right, to 4 trillion in total. So it's definitely predicted to have a great future, and I think it's because it sort of follows a number of trends that are all going upwards, right? So digitization is increasing, crypto adoption is increasing, retail adoption and sort of investment into different asset classes is increasing. So all of that taken together means that it's quite certain that tokenization and sort of the ecosystem we are building will sort of merge and eventually be adopted by the big financial players, and also sort of by smaller ones, right? That's what we are seeing to begin already now. And of course, what it will mean is that we will have like an ecosystem eventually that will be much more efficient with less intermediaries. So a lot of intermediaries that we are paying costly fees to right now will simply go away, like transfer agents, CSDs, corresponding banks, and so forth. Many intermediaries will just go away. It will also become much more transparent. Everything, of course, going on the blockchain is much more transparent and visible, right? And then, of course, it'll also be more inclusive and democratized, right? Which I think is one of the underlying values of what we're doing in the tokenization space. So people that are unbanked today will become banked and will be able to invest into real estate. So they can allocate a part of their small funds into real estate and get access to the same kind of sort of accumulation and development of wealth as rich people has access to. So there's a real chance that we can help to reduce poverty actually globally, right, and close the wealth gap.
I think it's really true. It started with this one guy from Nigeria who works for Saudi Aramco that invested in our fund. Then he introduced us to like 25 other Nigerians and some out of Ghana. And then it went from the oil and gas people to the real estate people.
Yeah.
And boy, real estate in Lagos in Nigeria is a good asset class.
Yeah.
And I think for most people, like even me, I mean, I'm in venture, so I'm really not going to do it. But for other civilians that would say, gee, maybe I should invest in real estate in Africa. But how are they going to do it? And how are they going to do it without a truth machine of trust to make sure they're not getting screwed? And then there's when you look at the inefficiencies of how you buy and sell stock on the NASDAQ through your Merrill account or your Citi private wealth, it is insane. It's insane. It's almost like shocking that Visa, MasterCard, Amex, tax everybody like it's the Mormon church. Like, why? It's just unbelievable how inefficient that system is. And I think that focusing on real estate really makes sense, especially if you can say, here's one umbrella where we've got African real estate, we got Kuala Lumpur, you've got Jakarta, you've got Bali, you've got Miami, you have Nashville, all those things. I think it'll be more interesting for your win rate and your pipeline as well, that they know that there is liquidity in there. I remember I used to live in London, as you know, and that AIM, the alternative investment market, which was like the baby stock exchange of the LSE London Stock Exchange, at a time was really competitive with venture capital. That people are like, you know what? I don't need you VCs and all your due diligence. I'm just going to get a nomad nominated advisor to put their name on it, and then get 5 brokerage firms burning up the phones, calling everybody from Abu Dhabi to who knows where, South Africa, and they'll fill the private placement. But then you're listed on AIM, and anybody who had a market capitalization of under 100 million sterling, there was no liquidity. So you bought into an initial public offering, you funded a risky venture type asset with no diversification like the VC has. So the whole thing is kind of crazy. And then there was no liquidity afterwards. Whereas if you get to over 100 million of market cap, the liquidity is there. And so now you can buy and sell. There's volume happening every day. It seems like the goal would be to get your real estate exchange up to a point that there's enough people, you're aggregating
Yeah.
people, and then therefore you're delivering that value.
Yeah.
So it would be a bit of a game changer. Well, listen, Klaus, I know you're a busy man, so I shouldn't hold you hostage, for too long. Anything else you want to say before we close out?
No, I think we covered it pretty well.
Yeah, I mean, maybe there's digishares.io is the website. So digishares.io. And do you want to should I throw your email on the show notes? So
sounds good.
So it's Klaus@digishares.io, is that right?
That works too, but it's actually cs@digishares.io. But I think the other one also works.
That's very Danish. It's very Danish. I have ACR as well as my secret email. So to keep in line with the Nordic protocols.
Yeah.
Okay.
Yeah.
Well, Klaus, great to see you. Super to hear about all this traction. Excited about the latest fundraise, and just keep signing up these customers and make them pay.
Yeah.
I love it.
Yeah. Me too.
Okay,
Thanks.
my friend. Okay. Bye for now.
Bye-bye.